Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm very sorry for coming in a little bit later than expected, as we had some technical issues as regards to the audio, but thank goodness things have been resolved, at least in the meantime. And I will really appreciate if I get a feedback from you as regards to the sound quality. If it's okay, please let me know, and if it's not, please let me know, so that we can do the necessary adjustment to make our experience a better one this morning. So I'm excited to welcome us all to yet another promising edition on the Forex Morning Mastery, our daily dose of financial insight and trading strategies. Well, today is the last trading day of the week, and obviously, it comes with its own peculiarity as we expecting to see some volatility today, especially as market participants are looking forward to the US Core PCE data coming up later today. And in fact, we have very interesting and simple trading setup that we are going to be using to navigate the current market dynamics today. So I encourage us all to stay tuned in so that we do not miss out on the ideas we are going to be deliberating on today. And for those of you who are joining us for the first time, you are highly welcome on board. I'm very excited to have you around with us this morning as we embark on your new journey with us. Before we go into the details, it's very important I also carry you along into what we really do here on the Forex Morning Mastery. So the Forex Morning Mastery is an avenue where we come together to do follow-up details on the assets we are monitoring for every week, and of course during the session we come to use our basic tools such as the economic calendar, trend lines, key levels, and chart patterns to view the market through the lens of technical and fundamental perspective. We do this 3 times in a week, that is Mondays, Wednesdays, and Fridays. So we here to understand the market dynamics together, and trust me, the more time you spend with us in this community, the better you get to understand how our analytical approach works, and eventually be able to use the information you gather here to make your own independent trading decisions. So it's on this note I welcome you all once again, and encourage you to engage in the comment section. And please do not forget to give the video a thumbs up if you have found this content helpful and useful in making your independent trading decisions. So with that being said, I see your comment from C40. Good morning to you, and thank you very much for your advices. I really appreciate them. I also see another comment here, okay, from Live Game Entertainment. Good morning to you. Live Game, trust you're doing very well. So with that being said, we will be diving right into the business. But before we go in, please, I would like you to give me a couple of seconds as I want to resolve some personal things behind the scenes, and I will get back to you in a moment. So please bear with me. I will be just right back. Thank you very much. Okay, so I'm back. Thanks for your patience. So we are going to be diving right into the business, and as always, the first thing I'm not sure if the sound is coming out quite all right. Um, I'm still finding it difficult to hear us. Please let me check the cord. Okay, so I just hope you can hear me. I need some feedbacks right in the comment section. So if you can hear me loud and clear, please let me know in the comment section. I'll really appreciate your feedback, as this will give me a sense of belonging as we go along in the session. All right, please. So with that being said, here we will be running into the business for today, and as usual, the first thing we normally do every morning before jumping into the technical details is to keep ourselves informed of what is going on from the fundamental perspective. And of course, by monitoring the economic calendar, we tend to pinpoint potential correlations between key economic releases and of course specific technical patterns on the chart, which obviously gives us an insight what is into the structures that will emerge as a result of the anticipation of this event. And of course, it also gives us a better timing to strategically position ourselves in such a way that we can capitalize on any potential move prior, during, and even after the economic event. Now, based on the assets we are monitoring for this week, remember we have been monitoring three financial instruments, which includes the USOILSPOT, the GBPUSD, that is the breaches against the US dollar, and of course my favorite amongst them, the XAUUSD, popularly known as the gold spot. And based on this asset, we have been monitoring high impactful economic features from both the United States and the United Kingdom. And so far this week, we've had some very interesting development. Though throughout the first half of the week, it was more of speeches and meteor economic features. Not until yesterday, I think Wednesday and Thursday, we begin to see some high impactful event, especially from the United States. And of course, yesterday we also witnessed the United Kingdom's GDP reading for quarter one. So because of the importance of this high impactful event, let's run through what really happened during the course of the week. Now, the first high impactful event for the week came in on Thursday, and that is the gross domestic product annualized for quarter one, and that was from the United States economic docket. Now, for those of us who are not really familiar with what the GDP is, especially some of us who are new to this particular market, you see, the GDP is a key economic indicator that that gives us an insight into the annualized percentage change in any country's real GDP during the particular quarter. And of course, the anticipation of this event significantly impacts the sentiment in the market, as it provides a comprehensive view of the economic health and of course the growth in that economy. And it is expected from an economical standpoint that a higher than expected GDP growth usually strengthen the confidence in the market and of course on the currency of that particular economy. Now, if we look at the GDP product annualized for quarter one from the United States yesterday, it for the last quarter, it came in at 1.4% expansion, just as market had expected, but a little bit higher than the previous quarter, which was pegged at 1.3%. So what this simply means is that during the last 3 months, the US economy has expanded to the tune of 1.4%, which is a good development, but not as high as what we are used to when it comes to the United States. And of course, this information shows us that the United States is still the economy is still a little bit resilient despite the sluggish data we've been receiving in the last 2 to 3 weeks. Then simultaneously, we also saw a mid-tier economic features in terms of the initial jobless claim count. And of course, this data is a labor-oriented data. And if you remember, last week, we talked about how the Fed chairman said he will be willing to see what the labor sector is doing to further decide if truly inflation is thinning out in the United States. And of course, from the data we saw here, it shows that there is weakness in the US labor market, which reflects negatively on the US economy. As you will see, we had 233,000. It's still very high, but lower than the market expectation on, of course, the previous month. So we can say that there is a little bit of expansion in the labor sector of the United States. Then we had some other speeches. We had a couple of speeches on Thursday yesterday, which in summary, the Fed policymakers are still holding on to a wait-and-see approach to wait for subsequent data to further give them a clearer view into the inflationary pressure in the United States. And that brings us to today, Friday, June 28th. And we are going to be looking forward to the US Core PCE report coming up in about 3 hours from now. And this data here measures the average change over time in prices paid by consumers for goods and services in the last 30 days. Now, this data definitely is going to influence the sentiment in the market, as it will be giving us an insight into the inflationary pressure in the United States. And of course, this US Core PCE is considered as the preferred inflationary gauge by the Federal Reserve. So definitely everyone will be looking forward to this event, and this is one of the reasons why we have noticed the market hasn't really done anything aggressive during the course of the week. So I would encourage us to mark out the timing of that event. As you will see, it is expected that inflation will drop for the last month. So market is looking at a 0.1 to 2.6% for the month-on-month and the year-on-year respectively, as against the previous month, which came in a little bit higher than that. So we are going to be looking forward to see what the actual data will be. Will it be just as expected, below expectations, or even beyond expectation? But one thing we need to understand is that if the data comes in softer, that is lower than expected, we are likely going to see a decline in the US dollar. And of course, if the data comes in higher, then there is a higher chance that price of the US dollar is going to rise. Now, another event that happened today is the gross domestic product annualized for Q1 from the United Kingdom, which obviously came in higher than market expectation at 0.7% for the quarter-on-quarter and 0.3% for the year-on-year, which is obviously higher than the market expectation and of course the previous quarter. And this is giving us sign that the United Kingdom economy is probably recovering at this point in time. And of course, we saw a positive traction in favor of the British pounds this morning. Now, will this momentum continue? Well, we are going to be looking at the chart to see how the market is going to be anticipating the US Core PCE. And of course, this data that we are looking for in the United States is going to be bringing a lot of liquidity into the market. And considering the fact that today is Friday, the last trading day of the week, and of course the last trading day of the month, there is a high chance that we could be seeing some profit-taking activity, as majority of market participants who had capitalized on a trend throughout the course of the month may likely want to be closing in some of the position to recalibrate their stance ahead of the new month, and this could result into price action moving in the opposite direction of prior leading price action. So we are going to be taking all of this into consideration, and of course we do want to be on standby to capitalize on that massive move that is expected to come up today. So with that being said, here we will be diving right into the business, And as always, we are going to be running into the first financial asset on our watch list for this week. And of course, we are going to be looking at the US oil spot commodity. And of course, on this asset, we've done pretty well on this particular asset since the beginning of this week. Remember, we have been buying this asset as we rode the momentum all the way into that $82 area, as price is back into a monthly high. Now, for the sake of educational purposes and clarity, and obviously for the sake of those who are joining us for the first time this week, let's quickly run through what really happened during the course of the week and what led to the decisions we made. And before I go further, I would like to emphasize that I will only be deliberating on the 1 hour time frame, which happens to be our execution time frame. So I wouldn't be doing the higher time frame, we would not be doing the top down analysis. But if you do want to have a background knowledge of how we got to the point we are on the 1 hour time frame, I suggest that you watch my Monday video on the USOILSPOT, where we did a top down analysis on this asset, identify the key levels that we are going to be using to guide our trading activities for this week, and of course the current setup USA. So as at the beginning of the week, after of course understanding the nature of the market dynamic on the higher time frame, we had our key level situated at the $80.50 area. And of course, you know how we use our key levels in this community. As long as price action remains above the key level, we obviously want to be looking out for patterns and structures that support the idea of buying. Now, with the key level identified here, we obviously noticed that price action was confined around the key level, giving us a range bound structure between the $80.68 and the $80.20 area, giving us something to work with at the beginning of the week. And of course, you know how we treat our range bound structure. Whenever we identify them, we exercise patience and wait for price action to either break out of the resistance line of the range bound structure to give us an opportunity to buy, or the breakdown of the support line of the range bound to give us an opportunity to sell. And considering the fact that price action was trading above our key level, we were able to capitalize on bullish opportunity above the key level and above the resistance line. And of course, we added more positions at the breakout of the $81.30 level. So on the first trading day of the week, we were able to run this all 120 pips plus move, and of course with multiple entries, we were able to close the Monday session with about 100 to 150 pips minimum on both buying positions. Then on Tuesday, we begin to notice some signs of selling pressure resume in the market, and we decided to sell below the $81.30 level. That is a breakdown retest of structure, triggering a sell position. We did sell, though price closed at break even at that point. And during our Wednesday's session here on the Forex Morning Mastery, we were looking forward to more buying opportunity using this ascending trend line as a yardstick to guide our trading decisions. And of course, as you see, we had a buy position triggered at the $81.30 level, and we were stopped out of that position in a loss, of course, as price dropped below the ascending trend line. Then afterwards, I think during the later part of Wednesday's trading session, I updated us with a new trading setup that we will be using to guide our decision. Okay, this will happen during the United States session, where during the New York session, where I showed you how that zone between the $80 and the $80.50 area had become a strong buying niche in this market. As you will see here, that since the second week of the month of June, sellers have been finding it difficult to break through this zone here, making it a robust demand zone to work with ahead of the later part of this week. And as you will see, buyers had consistently found opportunity to push price to the upside. Now, with this information we had here on Wednesday, we strategically positioned ourselves for a buy opportunity yesterday morning, using this descending trend line as a yardstick, looking out for price breaking out of the descending trend line to give us the privilege of continuing the uptrend. And of course, we saw what happened. Price came out, break out, retest structure. So if you had missed out on the first buy position, the market was kind enough, came back, retested the structure, and look at what happened. So at this point in time, we have a minimum of 2 buy positions running with over 120 pips. Remember, we capitalized on the $81 level. We added more at the $81.50 level, and for those of us who capitalize on this opportunity, well done and kudos to you. So at this point in time, it is high time we moved our stop losses accordingly. Let's secure this current buy position as we anticipate the US Core PCE, which is likely going to be bringing some volatility, as we do not know what the data is going to be like. Will it show signs of inflation tuning down or tuning up today? And of course, if it tunes up, we know that this is going to affect the US dollar positively, and this will incite exact selling pressure on the oil prices, as oil prices will now become very expensive to buy due to the expensive US dollar. So secure your position right now. I'm suggesting anywhere around the $81.80 level seems most appropriate to move all stop losses to. And while we're moving our stop losses, please let's ensure that we give enough breathing space to contain the potential volatility that is likely going to be happening today. Now, with a well secured position at this juncture, what is really going to be happening today? What are the chances that price will continue to the upside, and is it possible that we may see price drop significantly to the downside? Now, before we go into the technical details, it's very, very important that we also keep tabs with the fundamentals behind the scenes, which obviously has been driving the sentiment in this market. Now, for those of you who are with me on my TradingView and Telegram platform, you must have gotten an update as to what is going on behind the scenes. But let's look at it together and come to a conclusion. Now, one of the major factors that has been sustaining this uptrend is the supply threat attributed to the escalating conflict in the Middle East, and of course weather related issues. Now, for the Middle East, we learned that there's been a heightened tension between Hezbollah in Lebanon and the Israeli government in recent times, where they have been attacking the northern Israeli territory for about a couple of days now, and it is believed that Israel is going on an all-out war on Lebanon, and this could escalate tensions in that particular area, as Iran could get involved. We never can tell, and Iran, being one of the major suppliers of oil in that region, could make things a little bit more complicated in that area. And due to these expectations, there has been increase in demand for oil prices, for oil commodity. Then another factor here is the there's this report that came in this morning by the FGE stating that the heavy rainfall in Ecuador has affected the production of oil and has reduced production to 100,000 barrels a day in the last 1 week, which has further pressuring oil supplies in the global market. Now, another factor that could influence the USOILSPOT today is the US Core PCE, which I made mention earlier. As we all know, if the Core PCE reveals that inflation is still high, then we could see the Fed maintaining higher interest rate for an extended period of time, and this will further increase the value of the US dollar and making the US oil commodity expensive to buy. But if the US Core PCE comes in lower than expected, there is a high chance that the US crude oil will continue to rise today. So given this latest development, the bullish outlook on the US oil remains very, very strong. However, with the end of the month approaching, we may likely see some profit-taking activities, which could lead to selling pressure, maybe coming back to retest this descending trend line that was broken yesterday morning. So to sell the US oil spot today, I will in fact need to see something like a reversal setup, maybe a double top structure, head and shoulder pattern, or a rising wedge on my lower time frame before joining a decline to the downside. But if that does not happen, we'll continue to maintain a bullish bias, and if there are any new levels to add more positions, I will definitely give you updates on both my TradingView and Telegram platform. So this is my simple view on the US oil spot for today. Let's mark out those levels accordingly on our chart, and for those of us who are in this current buy position, let's ensure that we move our stop losses to secure the current buy positions. All right, so I will be taking the next 10-15 seconds off. Let's see if there are any questions. If you have any questions, feel free to drop them in the comment section. Trust me, I'm here and willing to be of help in that regard. So I will see you in about 10-15 seconds, and use that time also to mark out these levels on your chart. All right. So in the absence of no questions, I want to take this as a confirmation that we are all on the same page. So with that being said, let's move on to the next financial asset on our watch list. Stay tuned in. So the next asset we are going to be looking at this morning is going to be the GBPUSD, the British pounds against the US dollar. And all buy positions have been closed right now. We took advantage of a buy position this morning following the positive UK GDP reading, which came in higher than market expectations. And of course, it resulted in a significant move to the upside, as we saw price started a couple of hours right at the 1.26250 level all the way into the 1.2645, but it appears that the strength of the US dollar is subduing the momentum that the British pound is looking for at this point in time. And understanding the intricacies in this market is very, very important. We had the GDP coming in higher than expected from the United Kingdom this morning, and I think that major key players in the market are very, very conscious of taking any aggressive bet at this point in time due to the US Core PCE coming up later today. And of course, before they could make any informed decision, they want to see what the data will be like. Hence, we are seeing this choppy market conditions in the last 24 to 36 hours in this market. Though the path of least resistance for the pound sterling from a technical standpoint is looking bullish after considering how it has been difficult for buyers to break through this 1.262 area, and a level which has been consistent with buy pressure for about 2 weeks, I think. Okay, about a week there, about 7 to 10 days thereabout. If you look at what happened here last week Friday, it was a buying niche, and look at what happened here on Thursday yesterday, a buying niche as well. And this morning too, you will see that sellers are still struggling to break through that particular area. And for me, this is looking a little bit bullish from a technical standpoint. And if we consider this strong impulsive bearish leg that started last week, at the beginning of this week, all the way down, remember we were selling the GBPUSD at the beginning of the week as we scoop in some significant amount of profit all the way down into the 1.262 area. And if you look at what is going on here, and considering the inability of sellers to break through that 1.262 zone, I'm thinking that we may likely see price action transition into a reversal pattern in the form of a double bottom structure, where the 1.26620 level will be serving as the neckline of that reversal pattern, and of course a breakout retest of that structure will be a good confirmation to continue this rebound. Now, I'm also considering the fact that we may likely see an opportunity to join even earlier than the breakout of the 1.2662 area. So I personally have a buy stop order above the 1.26450 area, which interestingly sits above this ascending trend line. And of course, you know how we do it in this community. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that supports the idea of buying. So I will want to make another re-entry attempt at the breakout of the 1.26450 level, and of course having another buy position at the breakout of the 1.2662 will help us maximize the potential of this bullish move. Now, in as much as we are looking out for buying opportunities, we cannot ignore the potentials of the sellers in this market too. And considering the hawkish remarks from the Federal Reserve officials in recent times, the dollar has a platform to thrive on as we head into the new month. And considering the selling pressure that gripped this market since the beginning of the week, we may see a continuation happen today. And in fact, if I want to consider selling the GBPUSD today, I would like to see price action slice through this 1.262 zone, which I told you earlier has been consistent with buying pressure for the last 7 to 10 days. Now, for me to join a bearish move, I would like to see price drop, take out all the buy positions below the 1.26140 area, which happens to be the lowest point for this week, to join the trend to the downside. So I'm only going to be selling if price breaks down that structure. But if there is any development that shows otherwise, or gives us the privilege of joining the bearish momentum before the breakdown happens, I will definitely let you know on both my TradingView and Telegram platform. So basically, and based on the current market structure from a technical standpoint, we still hold a bullish bias, so we never can tell what will happen as the US Core PCE gradually draws near. So I will be giving us updates as at when due on my TradingView and Telegram platform. So this is my simple view on the GBPUSD for today. I encourage us all to mark out these levels accordingly on our chart, as we are going to be needing them as reference point to guide our trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section, and do not forget to give the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them. And this is one way you are supporting this community to grow. So let's see. I'll see you in the next 10-15 seconds. If you have any questions, feel free to drop them in the comment section. See you in 10-15 seconds from now. Cheers. All right, so in the absence of no questions, I take this as a confirmation that we are all on the same page here, and let's just move right into the final asset on our watch list for today. So the final asset on our watch list for today is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And here on the gold spot, we have an interesting trading setup going on right now. We have a minimum of 3 buy positions running in profit at this point. Okay, the fourth one has been triggered, and then that one is still running in a loss right now. So we have 3 buy positions running in profit, while one is running in a loss at this point in time. And in fact, this uptrend momentum can be attributed to the rising treasury bond yield at the moment and the ongoing expectation of a hawkish Federal Reserve as market participants look forward to the US Core PCE coming up later today. In fact, the price of gold right now is dependent on the outcome of the US Core PCE that everyone in the market is looking forward to, as market participants are pricing in a potential federal rate cut in September amidst the easing inflationary pressure and slowdown in economic momentum in the United States. Now, adding to the appeal for safe haven assets such as gold is the geopolitical tensions in the Middle East, and of course the ongoing Russian-Ukraine war, which could further cause instability in these regions, and of course make investors put their capital, their funds in non-yielding assets like gold. So as a result of this, I want to encourage us all that for those of us who still have a buy position running on the XAUUSD, let's move all stop losses. Let's secure this current buy position while we wait out for new trading opportunity as the market evolves. Now, looking at things from a technical standpoint, remember we have been buying this asset since yesterday morning. We bought it right at the break of the 2003-02. Remember yesterday morning I gave us an update after identifying a range bound structure between the 2003-02 and the $2,296.50 level, giving us an indecisive phase to work with ahead of yesterday's trading session. And of course, you know how we treat our range bound structures in this community. When we have this kind of setup, we wait for price to either break out of the resistance line or the support line for trading opportunities. And as you will see, we saw price break out of the resistance line, and not only that, it also broke down this descending trend line I was able to spot here. And in fact, this trend line here is going to be playing a significant role in helping us understand how market participants will be behaving ahead of today's event. Now, if I project this trend line further to touch the previous high here, we have something like this. And from a technical standpoint, whenever we see price break out of a structure such as the trend line, we expect that some point in time price is likely going to come back and retest any of them to incite an uptrend continuation. Now, looking at what has been going on here since the New York session yesterday, we saw how sellers have appeared to take over the market and buyers finding it difficult to break through that $2,330 area. And if we go far left, going to as far as the mid-month of June, you will see how that same level had been a strong selling niche at some point, though we had some areas where it had served as a buying niche as well. Now, considering these factors here, we cannot ignore the potentials that sellers could come in. It could be as a result of profit-taking activity, bringing price back into any of this trend line today before an uptrend move happen. And if we look at the amount of pips that is going to be like, look at, we have about 1,400 pips, 150 pips, and of course 270 pips on the second one. So we have to capitalize between 150 to 270 pips in that regard. So I think that we should also open our bias for the bearish momentum as well. And what are the conditions that will make us consider selling this asset? Well, to sell, I would like to see price break down the key level at the 2,320, then drop to the downside. Then as soon as price gets close to the trend line here, we move our stop losses accordingly, secure the position, and wait to see how the market is going to react to that trend line. Now, if it goes ahead to break it down, then we will be looking at more selling opportunities and then move stop losses again as soon as price gets into the 2302. And if we see buy pressure resume around this area, maybe around this trend line here, any form of reversal pattern like double bottom structure or inverse head and shoulder pattern around this area, then we would like to continue the uptrend from there. However, it's not all the time price action does this kind of scenario, as it's a theoretical expectation that price will come back and retest the structure that it has broken. But sometimes price don't do that, it just continue its momentum to the upside. And as a result, we could see this whole consolidation phase we are currently witnessing transition into an uptrend continuation pattern, where the breakout of the 2330 will confirm the uptrend momentum and of course the strength of the buyers at this juncture. So personally, I have another buy position triggered at the 2330, and let's see how far that momentum is going to go. And remember, you want to be moving your stop losses accordingly. For those of us who have a buy position running at this point, I mentioned in my commentary this morning that you move all stop losses accordingly. The 2324 area seems most appropriate, while we give enough breathing space for price action to move around. So with that being said here, let's see how today is going to play out. And of course, we are going to be running the XAUUSD live window later today. It kickstarts 5 to 10 minutes into the New York session, and it lasts for about 5 to 7 hours depending on the volume of trading activity for that particular day. So we will be looking at this together, monitoring this real time, and let's see how much more we can capitalize from this market as everyone round off their trading activity ahead of the weekend and of course the new month. If you have any questions whatsoever, feel free to let me know in the comment section. I will be taking the next 10-15 seconds off. Let's see if there are any questions before we start rounding off today's Forex Morning Mastery. See you in about 10-15 seconds from now. Cheers. Alright, so in the absence of no questions, let's go ahead to round off on today's Forex Morning Mastery. We've been able to identify simple trading setups on both on all the assets on our watch list: the USOILSPOT, the GBPUSD, and of course the the XAUUSD. And I went further to emphasize how important today is, being the last trading day of the week, being the last trading day of the month, and market participants will be recalibrating and repositioning themselves ahead of the new month, and as a result we are likely going to be seeing some profit taking activities today, which will bring in some liquidity and of course volatility to help us scoop in some profits as we round off the week. And I do hope we all marked out the simple structures and levels we identified on the respective chart. If you have done so, well done and kudos to you. So all we need to do right now is exercise patience and wait for the structures to mature. And always remember that every decisions we make in the financial market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, ensure you have the necessary risk management approach in place. Now for the link to the XAUUSD live window, we are going to be seeing it immediately at the end of the live of this session. Click on that link, click on the notify me button so you can get notified as soon as we come on live. And I look forward to seeing more of you same time next week, Monday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to prepare ourselves for the new week and of course the new month. And if you are yet to subscribe to my channel, I encourage you to do so right now, because I will be sharing some insightful content during the course of the weekend in preparation of the new month. And of course, you don't want to miss out on that videos, as they will be serving as a platform in preparation of Monday's Forex Morning Mastery session. So I look forward to seeing you all in the comment section of both my Trading View and Telegram platform, and of course during the XAUUSD live window. So it's on this note I want to wish us all the best of luck today. Wish you a wonderful weekend and a happy new month in advance. Trade smart, trade consciously, and do have a wonderful evening. Bye bye.